And we're live. It's the February 24th Crypto Bootcamp weekly hangout, and it's stalwarts Chris, Mark, and Brian closing out the making up the group today. We'll see if anybody else shows up. We were just talking about how some currencies are probably better. My belief that long-term value, like the digital gold, and that other currencies are potentially or other altcoins are potentially a better match for being actual transactional currency. One of those being Ripple, which isn't real popular in the altcoin scene because of the fact that it's regulator approved and, all built into banking. But I think those are exactly the reasons why it's more likely to be used as a transactional token over the long term. And my only concern with that being that that most of the big transactions that are being done with the banks right now are using the Ripple derivative network, not the actual main Ripple token. And so that's fundamentally missing the opportunity for that token to already be in use as a transactional currency.
Right. Yeah, that's a good point there, Chris. Even when you read the news about Ripple, be like, so and so's jumping on Ripple, but they're not going to use the Ripple coin. They're just using the Ripple, platform
protocol. Yeah, exactly.
Yeah, which kind of makes me wonder, like, at what point, once they get these people adopted, are they going to be like, oh, well, we'll give you Ripple, and like, or what sort of economic carrot, if you will they provide to these companies to make it more lucrative for them to use the Ripple coin, and or will it ever become adopted, or will they just use the protocol?
I mean, I think that there's a good model in place that demonstrates how that could be done with BNB, right? Because BNB was a token that had no functional value, really. The only reason that adoption was driven was that Binance said, hey, if you use our token to pay your fees and the equivalent current value, we get a 50% discount on the transactions, right? That's a real world economic incentive to use this token as a transactional token. Remember when we were talking, it was, I think 2 weeks ago, we were talking about the Forex market in particular. And everyone sort of assumed that just about every currency was in trade. But when you actually look at the Forex markets, there were only like 6 currencies that were really traded regularly, right? You've got like the 4 primary ones, and then you've got 2 of what they call utility tokens, the Australian dollar and Canadian dollar, right? And so if those are functional tokens or functional currencies, right? Currencies like BNB and Ripple could be exactly the same thing, right? Something that you just use to sort of neutralize a transaction and to move a bunch of cash over here with a low-cost unit and little fluctuation in value,
Right. Did you guys read that article that I believe Julian posted a while back? Or maybe it was just on one of the news sites, but it was in regards to explanation.
What was that?
So it basically it was kind of giving an example of a token and the like using a lead.
Is that Mark?
I'm sorry, guys. I'm walking out in the street right now.
Yeah, no worries.
So basically, it was kind of giving an example of the value of a pipeline based on the amount of coins used to transact on a daily basis. So and so was using, they gave an example, meaning, and I'm probably going to skew a bit here, but basically they were saying that the network, saying that the network has value because of the amount of coins that are being put through it for transactional reasons doesn't equate into an actual store of value for the network, and it really is just a transitional thing. So.
But the thing is, I mean, when we're looking at like Forex style trading, right, the thing that we're looking at is volatility and like opportunistic volatility to be able to catch the movement of these cycles. And if you've got this sort of functional currency activity occurring and you've got new money coming in at various times, depending on all the other cycles, so you've got some ups and downs. I mean, BNB's had some pretty interesting cycles. You know, if you picked it up initially, like back when Brian Krebs was telling everybody, just get in, grab 5 BNB because you're going to use it for your transactions. And if you just grabbed 5 or 10 or 20 BNB, like you turned like a 3x on that in the last like 4 or 5 or 6 months, you know, without trying, you know.
Right, completely.
So if you actually invested in BNB, if you'd gotten like, you know, 1,000, 5,000, 10,000, that'd have been a pretty significant return, you know?
Right. And that speaks volumes to the, you know, to the transactions being used, like you said, getting a discount on transaction fees on the Binance, you know, Binance market. But will that continue to be a plausible use for coins to a place no longer trading on one certain market, right? When we get to that crypto idea that we, you know, that we can trade off, you know.
I'm not talking about exchanges though, right? All I'm saying is that Binance has proven that doing your model in your token can generate enough activity, like in monetary cap, for it to be a worthwhile token on its own to be traded based on those, you know, the variable values and volatility.
Sure.
So, like, if you've got, let's say we're talking about Ripple and we're talking about their platform, right? And they're saying, okay, we're going to build a derivative channel for you so that you have your own private networks, that you don't have to be concerned about your token activity being mixed in with all of the other Ripple token activity, which is about the only reason I can think of for them to be doing it in the way that they're doing it, because they need to provide segmented security for various systems, right? And that's going to be the easiest way to do it, is to have it on its own separate blockchain. I mean, can you think of any other reason?
No, I mean, it sounds pretty, you know, pretty much how we would do it. I don't know. I mean, I know, yeah, it's such a wide. And now we're speculating on how, you know, that would be Mark's area, economics major over there. I mean, like, I can't even comprehend at this point where the value would be. You know, like, it seems to me that like, just in your example for the BNBs, it's kind of bringing it back to the functional value of, you know, what a stock means to a company, right? So the stock's value is derived from the company you being worth from your, you know, your fiscal analysis of that company, you know. So BNBs,
we're thinking it in this particular aspect. What we've seen with the banking partnerships is that they are using the Ripple technology, but not the Ripple token. Like, they are partnering with Ripple to do these big money transfers, typically, like country-to-country money transfers. That's the primary functional purpose of the Ripple coin, right? And
that's right.
so Ripple is going to be, as an organization, they're going to be charging for these transactions, some sort of fee.
Right.
It's a big, you know, it's a big money warehouse, essentially, you know? And so if they're saying, well, hey, we can take our fee in USD, but by the way, if you'll pay our fees in our Ripple token, right, then we'll give you a 25% discount.
Right.
And hey, fees on a couple $1 billion in transactions with 25% discount, that's pretty strong. But Ripple still profits wildly because that influx of monetary capitalization into the Ripple token starts driving up value.
Right.
Right. So what Chris is saying basically is that if people are using it even to pay for fees, as they do with BNB, it's going to increase in value because more people are going to hold it. And they're going to hold it not necessarily because they're buying and speculating off of it, but because they're going to hold it to save money on fees. And thus that, you know, increases the value by default, because the more people that hold, you know, and buy these tokens, whether it's to pay for fees or facilitate transactions, it's going to increase their value. So if that's the, you know, if it was successful with BNB, and it's also, you know, applicable with, you know, XRP, Ripple, whatever, you know, it's only a matter of time before that increases in value as well, right?
And that's, you know, and it's double dipping almost, because they created the Ripple at a cost of nothing more than the computing power necessary to generate the transactions that created the Ripple. And you can charter vast amounts of your altcoin with very little effort, right? You can make your very first Genesis block, right? It's like, I now have 2 billion altcoins, right?
Yeah.
Yay! They're all worth nothing, but I have them, you know? And
Right.
so now, if I'm getting paid by the banks, because the banks would have to get stake in Ripple in order to be able to pay these fees, right? So they're going to be putting USD or Bitcoin or Ethereum in for that Ripple just to create their fee balance. And then each client is giving me back Ripple every time we do a transaction at USD value, right? Minus 25%, but that's what we're going to pay for this, because the actual token that we're getting is going to do 5x, 10x, 50x, 100x as the volume grows. And what you're getting back is always outpacing what you're giving away in a discount. In fact, you could start going to 50% discount or 75% discount based on the growth.
Right. Right. That's a good point. Yeah, that seems pretty lucrative and important for, to get them into the system of using the Ripple coins. It's kind of like, well, even more reason why it seems like I was kind of worried when, like you said, that they were using the Ripple protocol but not the thing, and it kind of seems like it's almost like yeah, jump on our thing. No, you don't have to use our coin. Nah, don't worry about it. You're good right now. Until they pull that move and they're like, 25% on your, $5 million worth of transaction fees. You want a discount? So that is a good point.
We're talking way bigger, right? One of the things that we always talk about is the economies of scale and how much smaller the cryptocurrency market is than the traditional market. And so most people, I don't think, even realize we're talking like hundreds to thousands of times more capitalization in segments of the market than versus what each individual cryptocurrency is contributing to that particular vertical, right? You may have you could have $1 billion in market capitalization for a wildly successful crypto token, right? In one particular vertical, but there's going to be $1 trillion or $10 trillion in actual USD, market capitalization in that same vertical. So, like the amount of growth that's still possible across all of cryptocurrency is I mean, just ridiculous.
Right. And especially like you're saying, if it starts to become used for transactional value, that exponentially right there, you start to see how many banks or whomever is using the protocol is going to be transferring that amount of money now just through Ripple. Yeah, that's crazy.
When you talk about, budgets and market capitalization in both USD and Euro, and of course there are a few others that are worth looking at. I mean, Yen obviously and Yuan, but all of them are in the T's, all of them. And that means that even the biggest players right now on crypto have 1,000x growth to go.
Yeah.
From your ears to the market's, from your lips to the market's ears.
The genie's out of the bottle now. It's one of those things where you can't put it back. You know what I mean? We've hit critical mass on forward momentum with blockchain. Too many major groups are too heavily invested in it. There's never been a technology this heavily invested across the entire world's technology spectrum that hasn't become adopted in some greater way. This isn't like beepers, where it's some short-term trend that's easily out-teched by something new. All the things that are something new in this space just add on to the existing space. They don't replace it.
Right. It's like the internet, like we were talking the other day. It's like, in the early 90s, and people were like, oh, do you have a web page? No. Well, who's got a web page? Now, like, if you don't have a web page, you're not a serious company.
Right.
That's right.
It's pretty amazing to see how these things are going. But I think there are some real business models, and I'm probably going to tweet some summaries out once I publish this video out and share that with it. But I really hope that, some of those younger CEOs and founders, who maybe haven't spent as much time in the business space and they're still heavily focused on the technology side of it, I really hope that they're thinking about the long-term business and commercial viabilities of what they're building, because of the fact that that's what it takes to stick around. You know what I mean? When you look at the internet in 2000 and 2001, and when all these wild valuations started crashing down to nothing, right? But you had probably 100, 200 companies that not only survived that time, but thrived during that time, even though they took a hit along with everybody else, right?
Sure.
But that became their next model. I mean, some of the biggest players at that time are the mega players now, you know, Amazon, Apple, Google.
Right.
Not that Apple was
Right.
in space, but you know what I mean? Like technology
Sure,
is.
totally. Right. Yeah. And well, and I think to answer your question, it's going to be, you know, it's the same, right? Like there'll be those CEOs that are forward thinking enough and humble enough to feel like maybe they should invest in something that they're not 100% understanding or, you know, clear on, but they can see the future coming and they want to be part of it or jump in on it before it gets here. And then you will have those, I mean, as we can hear, be like, oh, it's a bubble, it's going to burst, you know, it's not really going to happen. There's no way that fiat currency is going to go away. Well, yeah, fiat currency may never go away, but things will change, you know, like, and especially the, you know, the distributed ledger ideas behind all of it, it really do make sound fiscal sense going forward for, you know, diminishing fees, the ability to cross borders without, you know, all the red tape that they have now, those kinds of things that are just gonna, I think, adjust.
Yeah. It all gets smoothed out over time. I mean, one of the things that we see in the evolution of a new technology is that you have the core technology itself, but then the thing that what has to build up around that core technology is all the supporting systems that translate nerd level tech into consumer level technology. Totally. I mean, even now, right, most browsers, the process of installing MetaMask to use blockchain applications through the browser is more than the average person can easily do without assistance.
Right, completely. Right, yeah, it's going to be the build your own website things instead of, you know, HTML, you know. Yeah, it will be the convenience factors that pop up that allow the common day-to-day people who aren't, you know, geekified in tech to utilize those things. The you know, once we have
once Chrome integrates blockchain, right?
Yeah. Yes. Well, Chrome and all of the mobile devices, Apple, Google, they're going to need to have some ability to either integrate the dApps into their currently provided stores or provide some sort of an app as an add-on, you know, like MetaMask isn't mobile yet, but if it had one.
I mean, here's the thing. We've got, you know, the Toshi browser, which is already natively supporting Ethereum transactions on mobile. And then we've got things like the Pocket Network, which are still in beta, but are basically open relay networks, which allow agnostic transactions to occur like cross blockchain and into any environment, but can be included back in a mobile app easily with an SDK. That pretty much makes it dead simple for any iOS or Android developer to just like, hey, include a library, kind of like Bootstrap or, you know, any of the other crap that we include. And now you have blockchain support in your app. Done, right? Just easy. And that's what I'm talking about with those supporting systems. You know, when Chrome adopts it natively, then you just know the time has come, right? But in the meantime, it's all these supporting systems building up along the way that are going to make it so much simpler for widespread adoption to occur.
Right, totally.
I mean, how long has the SSL certificate been out? And Chrome just really made it a thing where you need to have it by popping in an alert in the browser. Hey, this isn't an SSL secured site, you know?
Right. The little red thing in the top on the left. It'd be like, oh, yeah, totally. Yeah. Well, and that's a good point too. I think, I mean, all in the same idea. It seems like once you finally get mass adoption by different little things, who knows when the next convenience, you know, like right now I'm heavily looking at have you guys messed with the Ledger wallets at all? Like the nanos and stuff like that? Like the cold wallet?
No, actually, I'm pretty old school about that. Paper wallets work pretty well still. So
okay. Well, you know, I was I think I commented in the boot camp the other day about the ability to be able to transact directly from one of those cold storage wallets and not feel like your finances are in the hands of the security of your whatever chosen, right, market is, right? And the keys, the secret keys are on theirs and not yours.
Well, when Julian talks about how critical, and Nico as well talks about how critical the decentralization aspect is, right? Exchanges have fundamentally begun to centralize the transactions, much the same way that platforms like Facebook have centralized the web.
Right.
And so, as a long-term anti-Facebook guy, although I still participate on it, clearly, I certainly have that same sort of love-hate relationship with exchanges. And if we can really make an easy, decentralized platform for this,
right?
I mean, that would open up a lot of possibilities. But at the same time, I think you're going to see a ton of regulatory resistance to that because it's so difficult to take down things like money laundering when you have that sort of a network.
Sure. Well, and I was thinking of something similar to kind of like Tab Trader, or one of those utilitarian things that integrates with all of the different exchanges, whereby I could plug in my cold storage wallet through the USB port into my phone and interact with any different API directly. So I would still obviously have to have those accounts already open at the exchange, but I'd be able to use my money from my wallet as opposed to the wallets they have set up there for me on those exchanges.
Yeah, or you use a relay network. If you've got the option to shift that over into a neutral token, that functional token, right? Like an Australian or Canadian dollar, right? So you say, okay, I've got 5 Bitcoin stored on my Nano Ledger, right? I want to get a bunch of Ethereum and Neo, right? So I'm going to put in this transactional order, but you pump it into your relay network connection, and it becomes that marginal token. And then using oracles, right, the third-party exchange transactions are made, and you can exit through whatever means you want, like back out of the neutral token. Like the transactions themselves occur between the neutral token and third-party exchanges, and then you just pull that back out and you specify on the withdrawal what form of withdrawal you want.
Yeah, that sounds super convenient and easy.
That's what the relay network setup is. I mean, I got to get Michael O'Rourke in here on one of these, because that's what his team is building with Pocket Network. And so I've been seeing like the utility of what exactly that does. Their core target initially is just to give mobile app developers an easy way to include blockchain transactions, like create essentially dApps, but they don't need direct access to the blockchain because they use this sort of neutral API that uses oracles to exchange this neutral token for whatever the token being received is,
Right.
But that has so many other applications than just mobile apps. I mean, from a consumer perspective, there are hundreds and hundreds of possible applications for that sort of a network,
Totally. Anything that uses money at the point.
Right. Or at least money online.
Right. Well, yeah, totally. Yeah, that just brings up, I mean, the powers that be that track all of these kind of transactions have got to be shitting themselves. Like, what in the hell are we gonna do here? Like, before we could subpoena a bank and be like, cool, give me their records, and be like, done. They're like, now the ability to transact on both speed, time, and anonymity seems like it's just
I honestly don't think it's going to be that difficult, and I hate to be like the bearer of bad news to we're going to be all anonymous crypto market community at large, but you're connected to an ISP.
Yeah, right. Okay, true.
It's done at that point, right? Every packet coming out of any of your connected devices can be inspected. Every transaction can be unpacked. If it's a matter of decrypting your actual point-to-point encrypted application, if you actually have that, because most people don't, right?
Right.
So you're going to have some tiny 1% of people that they actually have to work at it for, but everybody else is already fucking owned. It's just done. You know, the fact that we don't have like agnostic, you know, peer-to-peer networks for internet access means that it's been game over. It's been game over for a decade. In fact, it's probably been game over for 2 decades, because when they first discovered that NSA box in the AT&T switch in Chicago, I think that was almost 20 years ago.
Yeah, I guess you're right on that point. But what if I used like the ham network and like it was completely anonymous, or like got me a GoTenna mesh, you know, and we were like built our own crypto non-internet connected blah.
No, I mean, you know, I honestly, I think there's a big reason why there's a lot of crossover between the I own AR-15s to keep tyrannical power from like taking over the government, and my cryptocurrency is going to be a totally anonymous way to have a decentralized economy. Like, they both have some utopian ideals that just don't bear up in reality, you know? These systems are already like way more entrenched than people know, you know? Like, if you feel like you need to bang on the system, then you need to figure out how to bang on the system from within the system, because that's the only place you're going to make any progress at all. Other than that, it's like, you know, a short life and or long-term imprisonment and or, you know, the FBI kicking down your door at 4 o'clock in the morning. You know, this doesn't end well for you. Figure out a better method.
Right, clearly. Well, you know, if Al Capone taught us anything, it's like, be as gangster as you want, but pay your fucking taxes,
dude. That's all they want. Pay your taxes. You can sell 100 billion tons of heroin. Just pay your taxes. Why what it's about? Call it tobacco, right? Whatever. Just pay your taxes.
Just pay your taxes. Yeah, no doubt.
I remember I worked for Dave Marshall back in the 90s, before the whole Voyeur dorm thing and all that blew up. And his brother was in one day and we were talking about taxes, and he's like, man, I'm happier than hell to write $1 million check to the IRS. I'm like, $1 million, sign me. You know? Because he's like, do you know how much I made to have to pay $1 million in taxes?
Yeah, you know, it's funny. My dad I mean, he's a hippie. He was born in the 50s, raised in the 60s. So he's kind of very much like anti-government. And we always owned our own business. So he was always not trying to evade taxes, but trying to like make sure that we use money to, like, you know, you buy a car so you get tax write-off, like anything we could possibly do.
Work the system.
To work the system to pay less taxes, like to the nth degree. Just sometimes I was like, listen, all this shit, can we just pay the tax? Just fucking pay it. You know, so it's definitely that. I mean, I think that I've learned enough to, like, if you don't, like you said, there's either jail time or a lot of running in your future to, like, consistently.
I mean, think about dudes like Paul Manafort, right? How powerful they are. I mean, we can barely imagine the level of influence these guys wield, right? And yet here he is right now looking at like 16 indictments, you know? And I remember like Milken back in the junk bond times in the 80s, right? The whole SNL scandal, you know? Like, these guys were kings of the world, right? Until they got brought down, you know?
Yeah, it's a bitch, and it's just like the government's like, hey, just pay your taxes, and none of that would have happened.
And the thing is, a lot of these people who are like, I mean, especially with like cryptocurrency, a lot of these people who are talking about like, we're, you know, I'm gonna do whatever, you know, like, dude, you're talking about like maybe a couple $100 or a couple $1,000 if you properly do all of your shit, you know, like, it's such a small percentage of what you're making, really, at the end of the day. You know what I mean? As long as you're doing it correctly, you know, if you're like, if you've done a bunch of bad transactions where you have a smaller and smaller cost accounting basis, then, you know, you might get back for some of your early ones and hopefully the later ones make up for it. But, you know, if you're making any form of decent money and you're not invested in 7-figure range at this point, we're not talking about that much money in tax liability. Why the hell would you want to catch a federal prison sentence over it, you know?
Okay. Yeah. 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 Totally on that. I hope, listen, if nothing else, I hope the SEC and the IRS are watching this boot camp and realizing that.
Because man, I think we're all pretty much, and we've talked about it a lot, you know, I think we're all pretty much examples of people who are operating in good faith, you know. I think that there's, you know, there are some suggestions about how you should be calculating all these things. My gut instinct is if I calculate my total wins versus losses for the year and just declare that as miscellaneous income and pay taxes on it, I think that's probably going to be fine, you know, for the scale of the trading that I'm doing, you know.
Right.
Right. And that's it. That's all they really care about, you know.
Right, and I think that, you know, in regards to those, you know, to the way that I've been reading how they want you to tax on every single transaction, I think that's unfair, and I think that I really think that they're talking about people who are transacting on a much higher value for dollar ratio. You know, like if you're making millions.
I went into Coinbase, right, and because I did a bunch of stuff on Coinbase last year between Bitcoin and Ethereum. And so I went through each of their little download transaction reports. It probably took me about 15 minutes to get all the reports, right? It's got all the stuff in there. So it's, you know, I'm going to do what I always do, which is give all of my documentation to my CPA and go figure it out. You know what I mean? So the tools are out there. They're not necessarily great yet. They're getting better. But I mean, I think at the end of the day, most of us aren't really going to have to worry about it so much, because as long as you're doing all the suggested best practices, you know, keep some portion of cash ready for any unexpected tax debt and all the rest of that shit, you know, make sure, especially if you're doing 1099 or freelance, or, you know, you run a couple of businesses, whatever, you should keep some cash on hand because you're probably going to have some tax liability. But you know, put it in a fucking fund and let it gain some interest over the year and be ready to pay it out when you're done, and download all your paperwork and hand it to a CPA, because that's his job, right? His signature is the one that goes on there, and then pay what they say to pay. It's not that difficult.
Yeah, no, it's definitely, I mean, in hell, if you got a good CPA like number 45, you can claim that, you know, oh, I lost $1 billion. I've been, you know, recouping that over the last 20 years.
Hey, some CPAs are better than others.
Oh, no shit. Well, but you can imagine he paid for that knowledge. You know, like he didn't get that knowledge free because of his good hair.
No. But I mean, you know what? At the end of the day, like, I'm not pissed that rich individuals do the best that they can to reduce their total tax liability.
Sure.
I'm probably a little bit more pissed at how effectively massive corporations play that system to reduce their tax liability, right?
Right.
Because they have a lot better capability of doing it legally. You know, like, I've worked for companies that had like tax audits that had been stretched out for like over 12 years, and they were just like, they kept dragging it out because eventually they would pay taxes. But you know, Apple was something like 12 billion behind in taxes. They just kept it rolling, you know, like, and you know, the U.S. government's not going to do anything about that as long as you stay within the legal things and you've got ongoing hearings. Their attorneys show up in front of an IRS judge every quarter, and they're like, "Yep, we're working on it, sir. See you next quarter." You know, but you know, but when you've got people who are like intentionally, personally, and companies who are, you know, like taking large amounts of USD and just straight out trying to secret squirrel it like out of the country, you know, I mean, that hurts all of us collectively, you know. Sure.
I mean, I think the lower ended things that people like that, you know, downhanded, or however, I don't know why I'm having a hard time figuring out saying the way I want to, but that's a little rough. The ones I get more pissed off at is when, you know, our government gives tax breaks to these large corporations. Like, did they need that fucking break? No. Why did they get it? Be like, I need a tax break. Which one do I get? You know, like, we don't get one because you're only paying a little bit of money. Well, that's, you know, oxymoronic. You know, like, they're paying a little bit of money because you gave them a big break.
Cities typically give out about $500 million in tax breaks plus free land to the sports teams that live there. And in a 30-year study, have never once seen an ROI on that, ever once.
Yeah, that's those are the kinds of ones where I'm like, the amount of money that the NFL is raking in, why don't they get the exact amount of tax? Be like, come on.
They're nonprofit, bro.
Yeah.
What's that?
They're nonprofit.
I know that's a big fat bullshit. Okay. Like, we're nonprofit because any money that comes in, we split it and give it to everybody that's a shareholder. Oh, we didn't make no profit. We gave it all away.
No shareholders because it's a nonprofit.
Right. Yeah. Right. Sorry, we gave it to the board of directors.
Employee on the board of directors $1 billion a year, and that's perfectly legal because that's just salary.
Yeah.
It's an interesting system we live in, but like I said, it's my preference, no matter what I'm doing, is to bang on it from within it, because I've seen what it takes to live outside it, and generally that's not a pretty picture.
Right.
So this is unexpectedly dark Crypto Bootcamp Hangout week. But we did talk about transactional currencies and why you should pay your taxes. So I think we've accomplished some things.
Yeah, totally. I'm in the middle. Actually, not middle. I just started. Mark suggested this book that I'm reading about trading. It's called Trading in the Zone by Mark Douglas.
It's really good.
It's freaking fantastic. I'm only in the first chapter, and I'm like, it's one of those books where you're like, you don't want to put it down. I had to go work outside in the yard this morning, and I was like, every time I took a break, I'd pull it up on my phone and scroll through a few more pages and read it.
So what have you gathered from it so far?
The talking about, what it takes to be a good trader to begin with, and what the difference is between people who come into it with an idea and what they think they can do, and how they actively believe they're risk takers, but they're not really buying into being a risk taker, right? Like, everybody says, oh, well, doing stocks, is a risky thing, so I'm a risk taker, blah, 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 but they're not actualizing what the risk is and emotionally preparing for that. We're like, if you make a decision and it doesn't go right, well, you're not emotionally attached to that because it was a risk and it was set up that way. That's a learning lesson, right? That I've kind of already learned about myself, because I thought that, I played in stocks. I know about being a quote unquote risk taker, but like he was saying in this book, he's like, I did.
Adrenaline comes on.
What's that?
So when that slide starts and the adrenaline comes on?
Yeah. And what I like about it is he says that if you're a real risk taker, you don't have no problem getting in or getting out at a loss, and knowing the decision you made, hey, it wasn't perfect. You're not perfect. You're not omniscient. So you make decisions, you capitalize the risk. You take it at a loss, you move the hell on.
Yeah, it's true. It's a book that I highly recommend. I've actually read it a couple times. It does explain what I think, it takes to make a really good trader and what separates them from the rest. And it also, brings to light that, really good traders are pretty rare. It's pretty rare. I mean, 90% of the people enter markets, they lose everything that they start out with, and 10% manage to stay in somehow. And then you have another, of those 10%, 1% actually is successful trading. Now I'm talking about traders, not like long-term investors or anything like that. But yeah, trading in itself can be very psychologically demanding, and there's a certain mentality that you need to have in order to do it consistently successfully. There's, it's Douglas talks about trading your edge. So whatever edge it is that you have, you should always trade that, because an edge is simply that. It's something that gives you a statistical advantage over somebody else. And when you keep using that, when the probability is in your favor and you keep on placing bets, more than likely you're going to win. And when you do that over time, it makes a big difference. But there's all kinds of little market myths that he tackles, which I really like, because he says over and over in his book, he says, you don't need to know what's going to happen in order to make money. You don't need to know the future to make money. And he says that a lot. He says, trade your plan. He says, 99% of the time, traders who would have just stuck to trading their original plan would have made money. How many times have you placed a trade with a plan and you got out halfway through it when things got a little crazy and you lost money, only to realize that in the end you were right? That if you had just stayed and traded your plan, you would have made money. I'm pretty sure if anyone here has ever done the trading, they know. It's happened to me. It's happened to a lot of people I know, that, everyone has a plan until they're in the trade. When they're in the trade, the emotions start getting a little crazy. Everything goes out the window, and adrenaline's going through your veins, blood pressure's going up, heart rate's increasing.
There's an old you're going that says no plan ever survives the first shot of battle.
Yeah, I mean, so it takes and there's all kinds of things that you can do to keep these emotions in check, because as simple as it sounds, keeping your emotions in check is going to make you, it's going to keep you rational so that you can make the proper decision. Now, how likely is it that you're going to make the right decision when you are leveraging too much, when you're using all the margin,
right?
When you're, it's high risk, high reward, and you're going to lose money you don't have. Even if you're right, you're really a lot less likely to follow through with your plan because of how you set yourself up.
Right.
So
totally.
you have to trade, the right amounts, and you have to come up with a strategy before that trade. You have to have a plan. You say, okay, I get in here, I get out there, here's the target. And you have to ask yourself constantly, what is the risk? If the trade hasn't gone your way yet, but it's still teeter-tottering a dollar or two above and below your entry point, but you're somehow itching to get out, what is the risk? What are you risking if it's only, lose $1 or $2, whatever? So he talks about all of this stuff. And he talks about the mentality of winners, is that to be a good trader, you have to have that winning mentality. You have to pretty much win at life. There's no way that you're going to win as a trader, but you never won at anything else. You're not a winner in a sport. You're not a winner, I don't know, as to your spouse, as a father, as a student, as whatever it is at your work. You have to be a winner in your life for you to be a winner here, because only then are you going to understand what it takes to do it. But trading in itself is just like, it's dangerous. It's hardcore. It really is very demanding, and a lot of times, people, it's just like what you were saying, Brian. People will tell me all the time, "Oh, isn't your job risky?" And I never really saw it that way because of the calculation that I make before every trade. I honestly see a bigger risk of money sitting there and becoming losing its value over inflation than on a well calculated investment. What you stand to gain is outweighs the risk of not doing anything, to me anyway. But yeah, this book is fantastic, and I've read it a couple times. It's life changing, and it applies to trading anything. It basically, it doesn't matter how much technical analysis you have, and he kind of actually dismisses that a little bit, which I'm okay with because I know a lot of technical analysis, but I take that with a grain of salt because here's the thing about technical analysis: everybody's got it, and if everyone
Right.
has the same tools, how likely is that to work? But
Right.
but here's what he talks about that I like, and this is how I explain things to people when they're like, "How did you know this was going to happen?" And I can't really explain it. And I've been trading for many years, and one of the things I've been trading for almost a decade now. But one of the things this guy says is some of the best traders. I mean, he actually sat down and studied a lot of traders, and he noticed that the ones that won consistently, he saw some guys that would place hundreds of trades before ever losing once. And he's like, why? Why are these guys winning? So he would ask them, and they wouldn't know. They couldn't tell him. And I have encountered that. There's been periods of time where I'm winning and winning and winning, and I can no longer tell you why I thought this was going to happen. So he describes. I don't know if you've seen. I'm sure you guys are going to know what I'm talking about when I mention this, but uh, whenever someone new that I see enters the market, any market, they come to me and they immediately go, "So, what kind of news publications are you watching? So, where do you get your info?" As if like I have some kind of link to this fucking Wall Street Insider. Sorry about my French, but I don't.
Right.
I don't have any inside knowledge that
Right.
it's like, so what publication, what magazines or whatever, and a lot of people, the first stage of trading, they call it the informative stage. That's stage one. That's where you're doing fundamental analysis. That's where you're like looking at the profits of XYZ company, earnings per share, price per earnings ratio, all that stuff. So this is informative. They're like, oh, okay, this is a good company. I invest in it. And then you figure out that this only works for so long. And you're going to get burned when you do it this way. So then you go to stage two. You go for the mechanical stage. And this is also something Douglas covers. And the mechanical stage is once you start seeing patterns in the market, you end up spotting these patterns, and you're like, oh, okay, if this, then that. If this happens, then that is likely to follow. I've seen it so many times. I've seen this pattern, and you're going to trade like that. And you'll probably be a little bit more successful than you were with stage one. And you're like, all right, cool. So I just learned these patterns, and I'm good to go. But that'll only take you so far. Once again, you'll eventually lose because you can't trade based off of patterns forever, because that's like driving while only looking at the rearview mirror. And so he talks about the third and final stage, which is the intuitive phase. This is the phase where you are so in tune with the markets that you don't even know why but you're going to place these trades and you're going to have a plan. And this is where you use your collective knowledge, the fundamental analysis, the technical analysis, the chart patterns. You use everything, your instinct, and that right there. Once you have reached stage three, is when you'll be successful. But you have to, at all times, be really confident. You have to be mentally stable. You have to be sharp. This is something where you basically got to be killing it. You got to be on top of your A game every time that you're doing this.
Yeah,
you have to be committed.
I frequently said to people, if you're not a trader, don't trade. You know what I mean?
Yeah.
I'll get into the market and I'll look at and see that there's some opportunities, and I'll trade up here and there, and I'll jump in every now and then and see that I can shift my positions a little bit to get some gains, and so I will, But primarily, things that I'm holding for the long term, right? And I'm waiting for a significant multiplier, not not just that 5%, 10%. I'm looking for the 5x, 10x, And so I don't have the time or attention span or patience to be living that all day, every day. And I think it takes that. I mean, I've said that constantly. If you're not a trader, don't trade.
It can be very exhausting, actually, especially like if you're new and you're trying to put in an entire day's trading session, that could, I guarantee many people who think they have the stamina to do that do not. And it takes a lot of time to build up. It's a commitment. I mean, if you're going to place the occasional trade, I kind of see that as managing your investments. Like, all right, I'm going to take some profits here. I'm going to re-enter at this position. But if you're trying to make your income solely as a trader, that is an entirely different ball game. It's like one of these things where you always have to be informed and you have to know your instrument that you're trading and what is going to affect it, and then try to stay on top of those factors that are going to affect it. Like for stocks, you have, the jobs report, the Federal Open Market Committees. You have, you have like the Labor and Statistics Department releasing numbers. You have quarterly earnings, the GDP numbers, all that stuff. You just have to make sure that you keep track of the economic calendar, and there you go. And with crypto, it's even different. It could be sensitive to a myriad of things, and you have to know what kind of sets it off, and then once you're kind of connected, you have to tell yourself, all right, which hours am I going to commit to trading? And let me tell you, the thing is with trading is that it's a very disciplined thing. You have to be very disciplined, very patient, and 99% of the time you're doing nothing but waiting for that move to show up. Because if you're not waiting, you're not patient, you're gonna be doing a lot of over trading. And if the losses don't kill you, commissions are going to kill you because you're trading too much. You're trying to figure out every move. Then there's revenge trading. There's all kinds of things, not cutting your losses quickly enough, turning a bad trade into an investment. I've heard it all. I mean, how many times you put in a trade, it doesn't go your way, and then you're like, well, it's an investment. No, you have to be, if you said it was a day trade, yeah, because you have to take responsibility. And the thing about trading is why a lot of people are not successful at it is because they cannot admit when they are wrong. And what he talks about in this book, Mr. Douglas, is that he says that what makes people great, as opposed to people who aren't, let's say like athletes, let's say Kobe Bryant, Michael Jordan, whatever. What makes these guys excellent is that they're not afraid of making mistakes. And anybody could tell you, Wayne Gretzky, Jordan, that of how many shots they missed before they started getting good. Michael Jordan said he missed maybe like 1 million shots or something like that before he got good. If you would have talked to him, he talks like he was like the worst player of all time. And remember, he started off playing baseball. And it was just this craft that he began to master, and he didn't care about making mistakes. He kept doing it and doing it and doing it until he was good. Now, if you're trading, if you did make a mistake, if you care that much about being wrong, you're not going to take responsibility. You're not going to cut it, and it's going to go against you, and you're going to lose a lot of money. All of these psychological factors that are involved in it, I've lived them. I've breathed them. I mean, this book here, it explains all that stuff here. I'm like trying to sell the book, it's an old book too. But it's good. I mean, and that's how, this speaks of my experience as a trader too, because a lot of people were like, they asked me like, what kind of technical analysis books did I get, or what kind of strategies? Those can only go so far, but I guarantee you a good mindset will profit much quicker and much bigger than any technical analysis guy, any strategy, any day of the week. You give somebody with a good mindset.
One more time.
What's that?
Can you say the name of the book and the author one more time?
Oh yeah, it's called Trading in the Zone by Mark Douglas.
Trading in the Zone by Mark Douglas. That puts us right at an hour, so I'm going to go ahead and end the broadcast portion here.
Cool.
And thanks for tuning in.